Have you ever wondered how you might be able to finance your home creatively? I'm Wendy Wolmowski, a realtor with Two Crown Home Team at Execu Home Realty, and we're going to talk about that today. One of the first things to consider is investigating local, state, and national down payment assistance programs. These programs give qualified applicants loans or grants to cover all or part of your required down payment. This can be a big help, especially for first-time home buyers. Usually with programs like this, be prepared you're going to have to take some sort of online or in-person course. They want to make sure that you understand the responsibilities of paying back the loan that you're about to get, and they go through all of the different aspects from a financial standpoint of owning a home. Another thing you might want to consider is exploring seller financing. In some cases, sellers may be willing to finance all or part of the purchase price of the home and let you repay them gradually, just as you would do with a mortgage. This I've seen work in many cases, and it's a win-win for both sides. While they're not so popular these days, because interest rates have been low for so long, another way that you might be able to get into a house creatively is to assume the mortgage of the seller. This is where you take over the seller's existing loan. You still need bank approval, but this can be especially helpful when interest rates go up much higher. Like I said, it's not been very popular in the last 10 years or so because interest rates have been pretty steady. Another thing you could do would be to ask your family for help. Perhaps you have a family member that will loan or gift you the money for the down payment, or even act as a co-signer for the mortgage. Lenders often like to have a co-signer if you have minimal credit history. Another thing you might want to consider is a shared appreciation or shared equity arrangement. Under this agreement, your family, friends, or even a third party may buy a portion of the home and share in any appreciation when the home is sold. The owner-occupant, so that would be you, usually pays the mortgage and the property taxes and maintenance costs, but all the investors' names are usually on the mortgage. Another option, although it's pretty tricky and not a lot of real estate agents know how to do this well, so be sure to check fully if the agent you're working with has done these in the past, is to do a lease with the option to buy. So in a scenario like this, you would rent the home for a year or more, and that would give you a chance to save more towards your down payment. In many cases, the owners will apply some of the rental amount towards the purchase price. So in situations that I've been in, where I've worked with buyers in this kind of situation, let's say the rent is $1,200. They would increase the rent to maybe $1,400 or $1,500, reserving that $200 to $300 that would then go directly to the down payment when you go to purchase the house. This is good if you need a year or so to work on your credit, etc. Often the owner of the property, the seller, will require a separate security deposit. So one for the rental part, and then they'll want a second one that will go again towards the purchase price. A point of negotiation is if that money is then forfeited if you decide not to move forward with the purchase, or if it's returned to you. Another thing you might want to consider is a short-term second mortgage. These were really popular in the boom where people got 80% down on the first loan and a 20% down on the second. But if you can qualify for a short-term second mortgage, this gives you money to make a larger down payment. This may be possible if you're in a good financial standing with strong income and little debt. Such arrangements may also help you avoid a jumbo loan restriction, so anything over, say, around $750,000, and might even help you minimize or eliminate private mortgage insurance. Normally, you have to pay PMI if you have less than 20% in equity in the home. So if you were putting 20% down, normally you don't have to pay PMI. So if you'd like to know more about buying or selling your home, feel free to check out our website, twocrownhome.com, or check out the other videos that are here on our YouTube channel.